Oil prices jumped sharply on Monday after US President Donald Trump called Iran's latest response to a US proposal unacceptable, reigniting fears about supply disruptions in the Middle East. Brent crude rose more than 4% to $105 a barrel, while US crude climbed over to $100 a barrel in early trading. The rally comes as the Strait of Hormuz, one of the world's most critical oil shipping routes, remains largely closed, keeping global energy markets under pressure. Just last week, oil prices had fallen around 6% on hopes that the 10-week-long conflict involving Iran could move towards a ceasefire and allow a normal oil flows to resume through the strait. But those expectations are now fading. Analysts say oil markets is reacting almost entirely to political developments coming out of Washington and Tehran. One market analyst described the situation as a geopolitical headline machine, with prices swinging sharply after news statement or warning linked to the crisis. Attention is now turning to Donald Trump's upcoming visit to China later this week, where Iran is expecting to be high on the agenda during talks with Chinese President Xi Jinping. US officials hope Beijing could use its influence with Tehran to push for a broader ceasefire and help reopen shipping routes through the Strait of Hormuz. The closure of the strait has already had a major impact on global oil supplies. Saudi Aramco CEO Amin Nasser said the world had lost around 1 billion barrels of oil over the past 2 months, warning that energy markets could take time to stabilize even if exports resume soon. Meanwhile, new shipping data shows that at least 2 more oil tankers passed through the Strait of Hormuz last week, with their tracking system switched off, reportedly to avoid potentially Iranian attacks. The trend is highlighting growing concern among shipping companies and traders operating in the region. Analysts also warned that if the immediate crisis eases later next year, the threat of the future disruptions in the Strait of Hormuz is likely to keep oil prices elevated for years. ING analysts now expect Brent crude to remain above $90 a barrel through 2026 before easing slightly into 2027 as inventories slowly recover and global demand continues to grow. For countries like Pakistan, which rely heavily on imported fuel, any sustained increase in oil prices could add further pressure on inflation, energy costs, and foreign exchange reserves at a time when economies around the world are already navigating uncertainty.